The typical senior homeowner across this country paid $4,271 in property taxes last year. For 92% of those homeowners, that figure was higher than it ever needed to be. Not because they miscalculated anything, not because they did something wrong, because there is one specific form that reduces that bill. And for the vast majority of senior homeowners across this nation, not a single person has ever told them it exists. The AARP Foundation has confirmed it. 9.3 million older adults are eligible for a property tax reduction they are legally entitled to receive. Only 8% of them have ever actually submitted an application. The remaining 92% are handing over more money than they owe every single year. And the government has absolutely no plans to inform them otherwise. But here's the question I need you to stay for. The seniors who do eventually track down this form and go through the filing process, a significant portion of them still get rejected, not because they fail to qualify, because of one particular section on the application that almost no one knows how to complete correctly. The county does not return those applications with a note explaining what went wrong. They deny the application, close the file, and the opportunity is gone for another full year. I'm going to show you exactly what that section is. But before we get there, let me show you the actual dollar amounts we are dealing with. Here is what this video is going to cover: the name of the form and the mechanics behind how it functions. The range of savings, which runs from $30 all the way up to $6,500 per year, depending on which state you live in. The reason 92% of qualifying seniors have never once submitted this application. The precise mistake that causes most applications to get rejected before anyone ever looks at them. And the retroactive piece, because in several states, if you were eligible for this exemption in previous years and simply never knew about it, you can go back and claim those years. That final piece is the one most people never see coming. We will get to it. Consider a woman named Carol. She is 68 years old. She spent 26 years working as a public school teacher in the state of Illinois. She purchased her home just outside Springfield back in 2001 for $162,000. By 2024, the county had assessed that same home at $310,000. Her annual property tax bill had climbed to $7,400. Carol paid that bill punctually, in full, for more than 2 decades, never late, never disputing it. Then, in 2024, a neighbor happened to mention something called the Senior Assessment Freeze. Carol had never come across that term in her life. She went to the county assessor's website to look it up and discovered she had been eligible to receive this benefit since 2021. 3 full years of overpayment. 3 years. The county had never once brought it to her attention. Carol is not a cautionary tale. Carol is the standard. The AARP Foundation operates an entire dedicated volunteer program specifically because what happened to Carol is actively happening to millions of people at this very moment. And we have not even arrived at the rejection trap yet, the part that catches the people who actually do manage to find the form. The form goes by the name Senior Homestead Exemption. Certain states refer to it as the Senior Property Tax Exemption. In Illinois, it is officially called the Senior Citizens Homestead Exemption. The name varies from state to state. The way it functions is consistent across all of them. Here is the basic mechanism. Your county determines your property tax by applying a tax rate to your home's assessed value. The exemption works by reducing that assessed value before the calculation ever takes place. So if your home carries an assessed value of $300,000 and your state provides a $50,000 senior exemption, you are only being taxed on $250,000. That reduction stays in place every year for as long as you continue to own the home and remain eligible. Some states go even further and offer something considerably more powerful. It is referred to as the Senior Assessment Freeze. Rather than simply reducing your assessed value, this provision locks it in permanently. From the day you file, your home's taxable value is fixed at that figure. It does not move, regardless of what happens to the real estate market around you. Your neighbor's property tax bill increases every year as home values climb. Yours does not. Carol qualified for both programs. She had no idea either one existed. Here is a look at what the real savings figures look like across different parts of the country. In New Jersey, the maximum annual savings under the Senior Freeze program reaches $6,500. In Texas, homeowners who are 65 or older receive an additional $60,000 exemption on their assessed value, which translates to roughly $938 per year in school district taxes alone. In New York, legislation that took effect in 2026 now permits local governments to exempt as much as 65% of a qualifying senior's home assessed value. That is a change that happened this year. In Illinois, the senior assessment freeze locks your taxable value in place permanently from the moment you submit your application. Run those numbers out over a decade. A senior homeowner in New Jersey who files today and remains in that home for 10 years holds on to $65,000 that would otherwise have gone toward tax bills. In Texas, the figure approaches $10,000. In Illinois, because property values have continued rising, the savings compound every single year while the freeze holds firm. And here is the detail that almost nobody ever brings up. All of those projections assume you filed this year. In certain states, if you qualified in earlier years and simply were not aware this form existed, you can file retroactively and recover a portion of what you overpaid. Texas allows claims going back 2 prior tax years. Illinois allows up to 3. For Carol, this meant 3 full years of overpayment she was able to attempt to recover. We have not arrived at the most troubling part of this yet. This exemption is not something that was introduced recently. The Senior Citizens Homestead Exemption in Illinois has been on the books since 1994. That is 32 years. Over the course of those 32 years, the state has never mailed a single letter to a qualifying senior homeowner to let them know the program exists. Not one letter. Here is the core problem. Property tax exemptions in this country do not apply automatically. There is no government system monitoring when individual homeowners turn 65 and updating their property records accordingly. No notification arrives in the mail. The county assessor's office administers these programs. They do not promote them. The entire responsibility for discovering the program, locating the correct form, submitting the application, and meeting the filing deadline falls completely on the individual homeowner. The AARP Foundation built a dedicated volunteer program specifically because this gap is so wide and so consequential. Over the past 5 years alone, that program helped Americans recover close to $10 million in property tax relief. $10 million recovered through a single volunteer effort. That number tells you precisely how many people are being left behind year after year. Here is where the situation becomes even more serious. Even when seniors successfully locate this exemption, many of them still lose access to it. Not because they fail to meet the eligibility requirements, because of filing deadlines that are never announced publicly. No letter, no reminder call, no advance notice of any kind. In Florida, the additional senior exemption closes on March 1st. In New York City, the deadline falls on March 15th. Texas closes its window on April 30th. Colorado extends its deadline as late as July 15th. None of these dates appear on your property tax bill. None of them are mailed to your address. If you do not already know to go searching for them specifically, the window slides shut without a sound, and you are waiting another full calendar year. But missing the deadline is actually the second most common reason people forfeit this benefit. The primary reason is the one I told you about at the very start of this video, and we have arrived at it now. Most counties operate several senior property tax programs at the same time. The Senior Homestead Exemption is a separate application from the Senior Assessment Freeze. The Assessment Freeze is a separate form from the Circuit Breaker Credit. The Circuit Breaker Credit is different from the standard Homestead Exemption that is available to any homeowner regardless of age. All of these programs exist simultaneously within the same county assessor's office, with different eligibility criteria, different deadlines, and different application forms. When a senior locates one of these programs and submits the wrong form, the county does not redirect it to the appropriate program. They do not place a phone call. The application is processed exactly as submitted, and then it is denied and closed. The applicant receives a letter several weeks later explaining they did not qualify, but they did qualify. They simply filed the wrong form. That is the first trap. Here is the second trap, and this is the specific section I referenced at the beginning of this video. The majority of states that offer this exemption have established a maximum household income limit for eligibility. In Illinois, that threshold is $65,000 per year. In New York City, it sits at $58,390. In Florida, the additional senior exemption requires the applicant's household income to fall below $36,000 annually. When a senior submits the application without including the required documentation to verify their income, the application is automatically denied. It is not reviewed and returned for completion. It is not flagged for follow-up. It is denied, the file is closed, and the applicant has no idea what went wrong. One missing document, one automatic denial, one more full year of overpaying. Here is what most people in Carol's situation do not realize until someone walks them through it. In Illinois, if you were eligible for the senior assessment freeze in previous years and never submitted an application, you are permitted to file retroactive applications covering up to 3 prior tax years. Carol's eligibility began in 2021. She submitted her application in 2024. That created a 3-year retroactive window. The county processed all 3 of those retroactive applications. This is as close as the property tax system comes to offering money that is already owed to you. No new financial investment is required, no financial product, no attorney. It is a form, and in the states that permit retroactive filing, the credit or the refund is already waiting. Step 1. Confirm that you meet the eligibility requirements. Most states require that you be at least 65 years old, that the property is your primary residence, and in many cases that your household income falls below a defined limit. Verify your specific state's requirements before you file anything. Step 2. Locate the correct form by going directly to your county assessor's official government website. Type your county name followed by Senior Homestead Exemption Application 2026 into your search engine. Do not rely on third-party websites. Step 3. Assemble your documents before you open the application. You will need proof of age, which is typically a driver's license or a birth certificate. You will need proof of ownership, which is your property deed or your most recent mortgage statement. If your state has an income threshold, you will need proof of income. Your prior year federal tax return or a Social Security award letter will typically satisfy this requirement. Attach every document when you submit the form. Step 4. Identify your county's exact 2026 filing deadline today and record it somewhere you will not lose it. Search your county name followed by Property Tax Exemption Deadline 2026. Step 5. Submit your completed application directly to your county assessor's office before that deadline arrives.